So has Netflix more recently become a value name for you guys, or even back at its highs above $400 a share? Did you see value in it? And I guess on what basis would you determine that there's value here in a stock that trades at, say, 50 times next year's expected earnings?
Yeah, we first purchased Netflix about 2.5 years ago in the Oakmark Fund, and that was around $150 a share. At the time, we viewed Netflix as making real significant investments in the income statement by underpricing their product to grow their market share of streaming. And we think that was an investment worth making. And when you fast forward to today and 160 million subscribers and $20 billion in revenues, we think that was a job well done.
Yeah, the strategy certainly a success to date, although it hardly seems now that they are underpricing their product relative to the competition, does it? And I guess the question with all the new entrants in this area is, what is the value of Netflix's head start as the incumbent?
Yeah, that's a great question. You know, it's really easy when you look at the news flow today to think about streaming as a zero-sum game. We just don't see it that way. We look at it very analogous to what happened in the 1980s when you look at the cable networks emerging. There was all this share to be had from classic network television, and there was a proliferation of cable channels. And they all basically won. And when the Disney Channel launched, the Discovery Channel didn't lose, and ESPN didn't lose when HBO launched. So we viewed the launching of different streaming venues today is very similar to that. It's just that the opportunity is to take business from classic cable networks and linear TV in general.
Yeah, but they all won because getting carriage was the key, even if nobody was actually watching you. In this case, it's an active relationship between the producer of the content and those who are watching, and they're paying for it, and either they want it or they don't.
That's correct, and that's why it's so important that Netflix has made this very successful transition to owned content. And they have a terrific track record of developing their own content, and that is what continues to drive customers to the platform and please their customers.
Tony, how closely are you watching subscription numbers? I mean, is that a key metric for you as an investor in Netflix, and should it be a key metric for folks that are shareholders in names like Disney? And I ask that because the key question here is going to be, how do you monetize those subscriptions? How much time are people actually spending? And how does that compare to other competitors? So is that the metric that you continue to watch, or is it something else?
Well, we watch a variety of metrics on Netflix, but subscriber growth is one of the more important metrics to be watching. Another one is the margins. If you look at the margins in the business, while they're not where we think they should be, they're growing very nicely today as they've been leveraging their content spend.
Yeah.
For a second, I just want to come back, though, to this point of competition, which you seem to say you think it's going to end up being similar to what the ecosystem was like over the last 20, 25 years with the cable distributors. But again, I don't get that, because here you make or break based on your content. It's not just you saying to Comcast, pick us up, and then you got 90 million homes, or Comcast and the Time Warner and all the other distributors. It's very different. Why are you not worried about perhaps them losing subscribers as people make choices at home in terms of what they want and what they're going to pay for?
That's a great question, and it's not that different. Because if you're a shareholder in Viacom, you're worried about how good their content is on Nickelodeon and MTV, and whether or not they're going to continue to attract an audience, because if you cease to do that, the value of those networks is going to go down. That's no different for Netflix.
So, Tony, I got to get your thoughts more broadly on the market. I mean, with the Dow and the S&P closing at another record high, albeit just barely yesterday, do you see value elsewhere right now, and if so, where?
You know, for a bottoms-up benchmark-agnostic value investor like Oakmark, this is a target-rich environment despite the market being near its highs. When you look at what's happened over the last few years to value, and we're all aware of that, there's been this haves and have-nots with multiples. And the have-nots have been getting cheaper, and the haves have been getting more expensive. And we have a situation where the market's become increasingly bifurcated. That is a good environment for a value investor to find things. And we're finding interesting pockets of value despite the market being near all-time highs. And that's the bottoms-up perspective. The top-down perspective is interesting, too. Cliff Asness put out a piece last week showing that value as a factor is more attractive today than it has been for 97% of the time in the last 40 years.